In this video, we're going to be looking at the head and shoulders pattern. Some of the objectives discussed in this video include recognizing the standard and inverted head and shoulders patterns. We'll be also identifying the completion of such patterns, and we will finish with some examples where we'll be deriving the one-to-one minimum price projection target. So let's begin with what a standard head and shoulders pattern is. Well, such a pattern has three peaks, and the highest one is in the middle, and that is referred to as the head, with lower peaks, which are called the shoulders, one on either side of the head. Now, a trend line is drawn by connecting the troughs on either side of the head and is referred to as the neckline. It's an intrinsically bearish pattern. So after breaking below the neckline, just to remember what the neckline is here, after you break below that neckline, the price is expected to continue falling. And the pattern is not complete until this neckline point is broken. So technically, there is no bearish bias associated with the pattern until the neckline is broken, since technically the pattern wouldn't actually exist until that neckline is broken. So with a note for volume, volume is expected to gradually diminish as the pattern unfolds, and then it would expand on the breakout. You can see here when the price breaks down below this neckline, that's when you'd expect the volume to expand upon the breakout. Here is a head and shoulders reversal, and that is occurring on Bank of America shares. Each candle represents 1 day. And here we can see both the one-to-one projection target, bear in mind that's the bit here, the vertical distance between the top of the head and the neckline directly below it, that is being projected then to get your one-to-one target. Now, volume here also helped correctly identify the pattern. Volume contracts as the pattern starts to form, and as you have that break, you have an expansion in the amount of volume that's being traded, where once again you have that breakout on the subsequent decline. You see when the price falls to the one-to-one target, that's when you seem to have a nice spike in the amount of volume that is being traded. So with regards to an inverted head and shoulders now, such patterns can also form upside down, the head and shoulders patterns. As we mentioned before, we had the standard one. This is now an inverted head and shoulders pattern. And the one before can form upside down, which gives you an inverted head and shoulders pattern. And these are normally bullish patterns. The neckline here is drawn by connecting the peaks. This is one peak on either side of the head, and this is another peak. You connect them together and you get your neckline. And again, a valid penetration of this neckline here. You need a break above for the pattern to be considered complete. So here is an inverted head and shoulders in Amazon shares. Each candlestick represents an hour because we're using the hourly. And again, both the minimum 1-to-1 and 2-to-1 projection targets are hit using the same method as before. Look here, this is the most pronounced area of support of the head, and we measure that distance from there to the neckline. We project that then from the point of breakout to get our 1-to-1 target, and we double that distance on top, and that gets our 2-to-1 target. And with regards to volume here, the volume action was quite typical of this pattern. You had a contraction throughout the pattern and you had an expansion on the breakout. Now, head and shoulders can also form as complex patterns where there are multiple shoulders on one or both sides of the head. So don't be confused if this happens. They can be treated in exactly the same way as a regular head and shoulders pattern. The important thing is to get the neckline right. This is the neckline. So now we're going to talk a little bit about that. So when there are more than two shoulders, these are some examples of the shoulders. We've got 3 here, we've got 2 there. That's 5 in total. Well, when there are more than 2 shoulders, generally, you would use the most pronounced peaks or troughs on the pattern to draw the neckline. So in this example, we have an inverted complex head and shoulders, where the highest peaks on either side will be where you use the points to connect the neckline. And if it was a standard complex head and shoulders, the lowest troughs on either side of their head would be used. Now, once the neckline is established, price targets can be calculated using the usual method, measuring and projecting the vertical distance between the head and neckline from the point of breakout. Hence why you could get here that distance between this point of the neckline and the head is then projected from the point of breakout to get you your one-to-one target. So that is an introduction to head and shoulders patterns. There are a few variations as they can occur as standard head and shoulders, inverted head and shoulders, or complex head and shoulders, as we've just shown here, which can also be inverted. And it's really important to remember that the pattern does not officially come into existence until the neckline is broken. The violation of the neckline is the crucial point in the pattern, and once that occurs, the price projection targets become active and we can expect them to be hit. Of course, it's not guaranteed and patterns do fail, but once the neckline is broken, there's a very good chance that the market continues in that direction and very precise targets can be derived, which makes it possible to manage risk effectively as a trader.